Okay, let's dive into this. Today, we're breaking down an investor pitch for a project called GenaImpact, and they are making a huge claim, one you can see right there. They say they're going to combine the viral power of a meme coin with the real-world utility of a serious financial tool. Their big tagline? A meme coin with a mission. So right off the bat, that's the big question we've got to unpack. What does a meme coin with a mission actually mean? GenaImpact's entire pitch is basically an attempt to answer that. They're promising to mix all the hype and community you get with meme coins with actual financial utility. We're talking earnings and AI-driven trading, not just internet jokes.
So, according to them, GenaImpact is designed to be a kind of bridge. They're trying to connect the old world of traditional finance, like banks, with the new decentralized crypto space. And the engine that's supposed to power this whole bridge? Artificial intelligence. So, how are they planning to pull this off? Well, the project breaks it all down into 3 different ways that you, as a user, can get involved with their ecosystem. Each one has its own level of risk and, of course, potential reward. Okay, so path number 1 is simple. You can just hodl, which you probably know is crypto speak for holding the token long-term and hoping its value goes up. Second, you can become a liquidity provider, where you put your assets into their trading pools to earn fees. And third, you can use their AI platform, which they call TraderSensei, that they claim will automate all the trading for you.
Now, that second option, becoming a liquidity provider, that's really the engine of their entire model. So let's zoom in on that piece. We're going to walk through the project's very own example to see exactly how they claim this whole thing works.
At its heart, the idea is actually pretty straightforward. Just picture a currency exchange booth at the airport. They keep a bunch of different currencies on hand, right? And every single time someone swaps one for another, they take a tiny fee. Well, in the world of DeFi, a liquidity pool does the exact same thing, just with digital assets. And the investors who put up the funds in the first place, they're the ones who get to earn all those little fees. So in their example, an investor kicks things off by depositing $50,000 worth of USDC. Now, USDC is a stable coin, which just means it's a crypto token that's always pegged to the US dollar. GenaImpact then comes in and matches that 50 grand with an equal value of their own token, GNIM. At 10 cents a token, that works out to 500,000 GNIM. You put those two together and you've got a total initial value of $100,000. You can think of this as the big reservoir of cash and tokens that makes all the future trading possible. This is square one. All right, so now a trader comes along. They want to buy some GNIM tokens, so they put 1,000 USDC into the pool. But, and this is key, this transaction isn't free. This is exactly where the earning mechanism for those liquidity providers kicks in. On that $1,000 trade, the system charges a 3% fee, so $30. Now here's the crucial part. That $30 doesn't go off to the company somewhere. Nope, it gets added directly back into the pool, making the entire pie just that little bit bigger for everyone. And this is exactly how those fees are supposed to build up over time. As the table shows, if that same trader turns around and sells their tokens back, another 3% fee gets generated. So after just one single round-trip trade, the pool has already grown by $60. The whole idea is that thousands of these tiny trades will just continuously add value to the pool for the providers. Of course, anytime you're talking about putting up your own funds in the crypto space, the first question on everyone's mind is always about risk and security, right? So let's take a look at the safety net GenaImpact claims to have built into their system. They list a few features they say are designed to prevent a rug pull, where the founders just vanish with everyone's money. They claim their funds are publicly auditable on the blockchain, the founders' tokens are locked up for a period of time, and any big decisions require multiple signatures to approve. And their long-term plan is to hand over control to a DAO, a decentralized autonomous organization, which basically lets the community vote on the project's future. They also make the case that their system has a built-in defense against market manipulation. The logic they present is that the 3% fee, which gets charged on both buys and sells, makes it way too expensive for someone to try and quickly pump up the price and then dump it for a quick profit. They're saying those fees would just eat up any potential gains. Okay, so that's their answer for malicious attacks. But what about just the normal, everyday ups and downs of the market? This brings us to a really key risk for any liquidity provider, a concept called impermanent loss. So, the GenaImpact pitch, it actually tries to tackle this directly. And here's how they explain it. Let's say the price of their GNIM token starts to dip.
The pool automatically rebalances. It sells some of the stable USDC to buy up more of the now cheaper GNIM. For you, the liquidity provider, this means the total value of your stake is temporarily worth less than if you had just held on to your original assets separately. That's why they call it impermanent loss. The whole idea is that if the token price recovers, that loss can just vanish. But you gotta remember, it's a very real risk if that price doesn't bounce back.
So, when you put all these pieces together, the different ways you can get involved, the fee structure, and the safety measures they talk about, it all leads to what the project pitches as its big win-win vision. And this vision is really built for two main groups of people. On one side, you've got the hodlers. The project claims they win as tokens get burned, which reduces the total supply, and as demand for the whole ecosystem grows. Then on the other side, you have the liquidity providers. They're supposed to earn a nice, steady income stream from all those transaction fees. The goal is to create a system where both of these groups can win. And at the end of the day, all of these mechanics, the fees, the token burns, the AI, they're all supposed to serve this one core mission statement: to build a totally self-sustaining ecosystem where, as they put it, finance has a purpose. And this really brings us to the fundamental question, doesn't it? The pitch, it sounds compelling, but we know the crypto space is just littered with ambitious projects. The real test is whether GenaImpact can actually deliver on all of its promises at the same time: real utility, true decentralization, and sustainable returns. That is the billion-dollar question that this project and anyone thinking about investing is going to have to answer.